Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, April 14, 2018. I'm recording this a little late. I had unexpected circumstances this weekend, so I'm recording on the 15th of April 2018. Most important news, I think, is of course the airstrike by United States in Syria, and the world is holding its collective breath. Possibly there is, there is many futures, and some of those futures will come to be. Some of those futures will be eliminated once the event passes, but we don't know which future will be the correct future. So we will need to keep our open minds to the possibilities of multiple outcomes, which could be better than expected or worse than expected. We don't know, honestly, what is the future. So we look at Russian trading system futures. They're down 21% from recent high. US dollar versus ruble. Stock market in general is still bullish. We'll look at junk bond, treasuries, intermarket relationships, bond proxies. So we'll look at many things, and this will be also good to just kind of review intermarket relationships between various asset classes. So we'll then look at Forex, gold, oil, energy, natural gas, cryptocurrencies that are still dropping. All right, let's. Today we will start a little bit unusual. We start with S&P 500 futures, but I think the biggest event this month or this week was sanctions against Russia for various issues. But then additionally there was a chemical attack in Syria, and then a American response, or rather allied response to that event. Now we're looking currently at the plot of Russian stock market futures, RTS index futures. Here you can see that up until recently, really, if I was to trade this chart, and I was really not trading this chart, but there is a American counterpart, I guess, to the Russian futures, which is RSX, which is an ETF, and you can see a similar pattern on this chart. But let's go to the actual futures chart. I think it gives a better picture. So here, up until very recently, this was still a bullish chart, and again, I would have been, going long, buying it. So, for example, here on the in September 2017, you can see a breakout, and then we can continue it higher. By the way, the charts, or rather the lines on this chart, the green, blue, red, and yellow line can be if you head over to MasterChartsTrading.com and then sign up. I'll share these indicators with you. So this chart in general, up to very recently, was normal bullish chart. For example, here would have been a nice opportunity. You can see on the 12th of February 2018. You can see we had a touch of this blue line and then a rally. So that's what I usually do, is I look at my indicators. These 4 lines, I programmed them in myself. So I look at the, for example, blue line, and I see, okay, we have we definitely have touched it. So in other words, the support has been touched. And once the support has been touched, we can look for a buying opportunity. If we're selling, if we're doing reverse, we're shorting, then we need to look for resistance and sell at resistance. But here we're simply buying at support. So we could have had a nice gain here if we were trading this particular chart. So up until very recently, this chart would have still been bullish, but then you can see that we had a very large amount of selling here on the 9th of April of 2018. I believe this is when the sanctions went into effect. And currently the picture for this particular market is difficult. but this selling, it's significant, so we could expect continuation into the bear market. In other words, we'll close below this yellow line and continue lower. Now, Russian stock market is a small part of the overall world market, and you can see that there was barely, if any, reflection of the sanctions or the airstrike in this chart of the S&P 500 futures. So what this is telling me is that this particular chart of S&P 500 futures, and by extension United States stock market, is still in a bull market. Now, you can see here that we're getting resistance. And how do I define resistance? You can actually clearly visualize it in this chart. You can see that the price has broken on the 22nd of March 2018, where my pointer is hovering. We had a break below the support because we had a close below the support line. And before, you can see it was acting as support. For example, here in the beginning of March 2018, we had several touches of the support and then a rally. So this is a normal support behavior. Then we have a broken support here on the 22nd of March, and now we have what's called a support that has turned into resistance. So if this blue line was before a support, now you can see on the 27th of March, on the 5th of April, and then on the 12th and 13th of April, you can see that price has come up to this blue line and touched it several times, but so far was not able to close above it. So this is consistent with resistance, behavior of resistance. Whether or not this resistance will be broken to the upside, and then we hopefully will get a rally higher, or alternatively, if this resistance doesn't yet hold and we get a push lower. So if we get a rally higher, then we could potentially break to fresh highs, because the move here is not enormous to the fresh highs, and we just had fresh highs. So by extension, this is a bullish chart. If we see fresh highs, we're saying that this is a bullish chart pretty much. Alternative scenario is possible, and the stock market is finally poised right now. You could go literally either way. So potentially this could be like a strangle options play, maybe 2786 and 2535 would be the targets on the upside, and the downside, short-term to intermediate-term targets. But again, overall, I think this is still a bullish chart. So also US dollar versus ruble. You can see there was a big move on the ruble to the downside. So in other words, the US dollar is winning this battle. You can see on the 9th of April of this year, breakout, and you can see a breakout above this blue resistance line at $58 or so. A close above it, push higher, and now a pullback. So pullback buying, you can see already is materializing at the support, I think, at around 61.41. I think still we could, pull back a little more, but this is a bullish chart, so I would be buying this chart, not selling this chart. In other words, I would be betting on the continuation of US dollar gaining versus the ruble. Small stock market picture still favors the bulls, and like I said, here is SPY, S&P 500. In general, this is a bullish chart for multiple reasons. These are fresh highs. You can see the support is still holding this blue line. This blue line here, possibly we're getting into resistance, but it's not. We could still break out and move higher. In other words, my bias is for the bulls. If or when we close below this red line and then continue maybe lower to this yellow line, then I will definitely start to worry. But for now, the market is literally like very finely poised to go either way. Small caps outperform large caps, sure. Yeah, IWM. You can see that IWM is trading. You can see there's this blue line here. Let me get rid of this. You can see there's the blue line here, and it's trading well above the blue line. You can see that it's trading just below this green line. If we go back to S&P 500, you can see we're still trading around the blue line. So IWM is outperforming, the small caps are outperforming large caps, which is a good sign for the economy. All right, so next we can look at junk bonds, and junk bonds and stocks in general correlate quite highly. And currently, junk bonds are, I'm avoiding junk bonds currently because we're pushing to fresh lows here. You can see we broke support, minor support here on the on the 30th of January, where I'm hovering. Then we broke major support here on the 2nd of February. And then at that point, since that point on, I basically am avoiding it and potentially shorting them if you know how to do this. You can do this with your options. So I'm looking at this chart currently and I'm thinking that this is a bearish chart. In other words, I don't want to be buying it, I want to be selling it. And where would I want to sell it? In other words, where do I want to short it? Where do I want to bet on the continuation of this price chart continuing lower? So as we speak currently on the 12th and 13th of April 2018, we can see that we're trying to, the resistance is trying to manifest itself at this red line. So I'm still treating this rally from the early April of 2018 to now as a possible dead cat bounce. In other words, this is a rally to be shorted in junk bonds. Now again, junk bonds and stocks correlate very, very highly. In other words, if junk bonds go up, then stocks go up. If junk bonds go down, stocks also usually go down. So this divergence where I see the price of junk bonds is pushing lower while the price of SPY S&P 500 is kind of much more bullish because it's upper right hand corner here, while junk bonds is a sort of on the lower, pushing towards the right, to the bottom on the right. So I am again concerned because there is a divergence and I don't know who to believe. Should I believe the junk bonds or should I believe the stocks? What do you guys think? Make a comment below. If you think the stocks are correct and we will move higher, or maybe the junk bonds are correct and all of a sudden the stock market will turn around. Yeah. So make a comment below. Also hit the like button. This is basically how I know that you guys are watching. Let me get rid of this. Alright, so rallying junk bonds is helping stocks. Yes. Because notice that we had a rally from the beginning of April up until middle of April, and also stocks kind of rallied from the beginning of April to the middle of April, which is now. So they do correlate quite well with one another, but as I said, I'm very concerned about this general technical picture because here back on the 9th of February 2018 we made a fresh low here, and in general, I don't like that because in a bearish security, you're making lower lows and lower highs, and by extension, you should not be buying that. You should be shorting it. Fear is on the rise. Yes, makes sense because of the geopolitical situation in Syria, especially. There is quite a bit of problems there, obviously, humanitarian crisis, and if you have opportunity, please do donate some money for relief of humanitarian conditions, poor humanitarian conditions. So yes, please do that, especially if you made some money from my help here, from my rambling. TLT here on the daily time frame again. This is bonds, and treasury, bond fund. This is basically as safe and secure as an investment can be, I think, at this point of our human history. So this particular instrument looks like it wants to go lower. And again, this looks like an opportunity to short, possibly. If there is going to be a true fearsome event, then most likely TLT will go higher, because this is the go-to place for investors to park money when there is fear on the rise in the world. In other words, stocks are dropping, but bonds could continue higher. Currently, I'm still looking at this particular chart as bearish. In other words, I would still look to short it. And then, of course, you can see corporate debt, LQD, also at fresh lows here in March, and potentially more fresh lows to come. Yeah, I would not be buying this chart at all. I would be looking to sell it and to or just get out of my positions, or possibly short it. Okay, let's continue to some of the bond proxies. Here is utilities. So bond proxies means that these instruments, for example, utilities, to a lesser degree staples, preferred stocks, also real estate, they are more interest rate sensitive than other parts of the stock market. So when interest rates move, for example, here's TLT or TYX, for example, here's the interest rate, 30-year treasury interest rate, you can see that the interest rate has been climbing. In other words, the prices of bonds are dropping. So we're currently around 3%. Now, when you're trying to buy a house, you need to borrow money, and if you want to buy a house, you need to borrow it at as a low interest as possible. Now, you can see that the interest rates has been rising, and real estate IYR has been dropping, which makes perfect sense, because this is a real estate is dependent upon interest rates. So real estate in itself is not a very big part of the market, of stock market, but it is still a sector of the economy, and it does tell a story, so to speak. So what I'm seeing here is I'm seeing real estate dropping, and this looks bearish to me, and again I would be shorting it. In fact, I think I shorted it here. I made very little money because I got stopped out. I did it via not TBT, I'm sorry. Actually, I did TBT as well, but for IYR I did DRV, which is a real estate inverse fund. So you can see that I had an entry at 13 bucks. Actually, it went in my favor, but because of this volatility, I got stopped out just above my entry at a very tiny profit. But you can see that it went higher afterwards. So right now, real estate seems to want to go lower, but if interest rates decide to drop, in other words, bonds will gain, then real estate again could rally from here, because real estate moves together with the interest rates, or rather the opposite interest rates. I'm sorry. So overall, I am looking at bond proxies. So here's utilities, seems to want to go lower, and this would also imply that bonds really want to go lower as well. So TLT wants to go lower, and with it we got utilities that want to go lower, real estate that wants to go lower, we got preferred stocks, PFF, that kind of want to go lower. In fact, I put this arrow there couple of videos back, so if you shorted it there, you could have made good money here already. And also, let me see, so we got utilities, real estate, staples, and preferreds. So staples to a lesser extent are interest rate dependent, but currently they are selling off, and I think they're in a bear market currently. So for staples, I would also short them. So we have now relatively, significant amount of sectors that are in a bear market. So we got staples, utilities, or the real estate, IYR, utilities, XLU. So this, and then preferred stock, but preferred stock a very small part of the market. So overall, these three sectors, the utilities, the real estate, and the staples, they are pushing the market lower. We have several other sectors. We got industrials, we got consumer discretionary, we got industrials, we got XLB, which is a materials. So these funds are still, I think, in a bull market, but there are, like I said, overall we're seeing pressure to the downside, and stock markets do turn around, and occasionally there are bear markets. And again, we need to keep an open mind to the possibility of that, because when or if this bear market will occur, you really need to have a game plan. And what is the game plan? I usually exit all of my stock positions when, or rather, I will usually exit my position when my stop is hit. If I was trading this particular chart, then I would put my stop at 2422 currently. So if we dropped, let me see, another from today's prices, if we dropped another maybe 9 to 10, probably 10% or so, then I would think that we're now in a bear market, and I would avoid buying. I would potentially short, but I would definitely avoid buying until we see a turnaround and then a push to fresh highs. But for now, like I said, the market is really finely poised and could go either way. Okay, let's continue to the Forex universe. Again, these four lines in the chart, the green, the blue, the red, and the yellow line, you can find out more about them at MasterChartsTrading.com and sign up there. What I'm seeing here is I see a bearish security. This is dollar index. I can see that basically there were short sellers that stepped in at the yellow line here on the 1st of March, and then another time here on the 6th of April 2018. This push lower was not huge, so somehow I feel that we may be bottoming here, and I think a rally could occur relatively quickly. So let's look at the individual components. Euro versus US dollar, still clearly a bullish chart. You can see opportunity here, small one, but you could have probably made a few pips. Let me see. If you bought exactly as a limit at the green line, you could make as much as 146 pips. It's not a bad gain. We could see I think we're ready to roll over, at least to retest this blue line, which is at 1.19. Here's GBP versus US dollar, British pound versus US dollar. Rally was slightly bigger of the green line here, but overall British pound and euro exhibit very similar behaviors. US dollar versus Japanese yen. Japanese yen is winning this battle, and I think we could look for a shorting opportunity at 108.420 or so. Unless we turn around and continue higher, and if we see a breakout above 110.946 here, I think we will be in a new bull market for US dollar versus Japanese yen. US dollar versus Canadian dollar, I was wrong here because I thought we were going to go higher from here, but no, we turned around and made a low. So I actually I had a position open here on the long side, but I got stopped out because of this volatility and this drop here below this red line. So right now I'm avoiding US dollar versus Canadian dollar and see which way this will break. Australian dollar versus US dollar, AUD, USD. This one is one of the weaker ones as well. So a break below this red line, 0.76312, could be quite bearish, and we could continue lower to this yellow line and or lower. New Zealand dollar versus US dollar looks pretty strong. This one looks strong. I would still be buying this one potentially at the blue line, 0.72664. US dollar Mexican peso, bearish, and again I would be, you can see very nice touch right there on the 2nd of March. just a beautiful rejection, and then sell. So this is a bearish chart. You can see there was a one arrow here back on the 15th of January. Pretty decent gain here as well. So right now this security is still, Mexican peso is still gaining versus the US dollar. Again, overall dollar is bearish, but I feel like the bounce, a relatively major bounce, is brewing probably to 92.60 or so. Okay, so after we looked at dollar, we can look at gold. Hit the like button, please. It's down below there. I do appreciate your clicks, and also if you have any comments or questions, feel free to write them below as well. So XAU versus US dollar, gold versus dollar. This is paper, gold, and Forex. Looks bullish. This, I believe, are fresh highs. So if you, for example, here's a opportunity right there on the 1st of March. Simply set a limit at this blue line, and you can find out more at MasterChartsTrading.com about this. Very, 4 lines on the on the chart. We did trade GLD, but back, that was the last entry we had at MasterChartsTrading on the 13th of December. Beautiful gain here. Notice here on the March 1st of this year, you can see a touch of this blue line, meander, and then rally higher. Another touch of the blue line, by the way, here on the 20th of March. So overall, looks bullish, but when we get to gold miners, I will voice my concerns. So here they are. GDX, and this is what concerns me is, once again, because I'm seeing a push to the new lows here. For example, there was a new low here on the 9th of February. Right now I'm still treating this bounce in April 2018 as a potential place to short it, or rather avoid it on gold complex altogether. For me to become interested in this chart, I would like to see a close above 2380 currently. Or I would just basically avoid it, because I'm concerned about the way GDX, the miners, are behaving. You can see they're pushing lower. GLD is the opposite, is pushing higher. So which one is correct? It's difficult to say. So if it's difficult to say, I avoid, basically. Alright, here's US oil, which is a CFD, contract for difference, that you could trade in Europe. In the United States we have light crude oil futures here. If you are a subscriber, then I sent an alert here on the 13th of February of this year, and you can see it went to fresh highs. So oil is currently in decent demand. I thought that United States fracking producers will outproduce pretty much anybody in the world, but the price is doing something completely different. So once again, as much as possible, I try to avoid the fundamentals, because quite often they get in the way of the analysis. And on this chart, if I knew nothing about it, it's just a bunch of squiggly lines, basically. It could be any instrument, and that's what I'm trying to say, is that you can trade pretty much any instrument as long as you know what you're doing, and you know how many shares are you buying. So for example, here's USO, and USO here, alert was sent on the 13th, and I always send it with a sample number of shares for the amount of how many dollars is your account, basically. So this particular setup is, you can put your stop, for example, usually I put my stop for commodities at the red line here, and then you can adjust your target. You can go further, or you can go closer in. It's up to you. So usually I give one average to range target, and you can see ATR is down below here. So in this particular case, the ATR is like 27 cents. So you would have reached your target and just the next day basically if you entered here. So again, you can see that how many shares are you buying is the risk control, and there's your number of shares to be bought for a $100,000 account. This particular interface will show you for $100,000. You can adjust it right there with settings, and you can do account size and risk amount. You can change it all. So again, if you have any questions, please ask me. I can definitely help you out, guys. Overall, energy, oil rather, is bullish. Energy was lagging behind, but I think it's now trying to catch up. So a big test is coming up at 72.17 for XLE, which is an energy SPDR. If we see rejection there and a push lower, then maybe XLE energy has rolled over into a bear market. CVX, also known as Chevron, very similar pattern. Big part of the XLE energy. So you can see that the test of the support or the resistance at 122 is coming up as well. XOM, ExxonMobil, much weaker chart than CVX. You can see on the 27th of February here, rejection right there at the red line and the push lower. So I wonder if the same thing will happen now at 78.58. Here's natural gas. Same thing. I think it's a bearish security. Where do we short it? We look. I personally look for shorting opportunities at the yellow, but much better at the red line. So if we get to like $3, I would definitely consider shorting it. Right now, it's just sort of in a no man's land. I mean, you could short it here at the yellow line, but again, this is a pretty aggressive short, and I'm not as aggressive as I used to be because I'm getting old. Okay, finally, cryptocurrency review. Bitcoin. It's a bearish security. Multiple occasions that you had. Now, again, if I was trading it, and you can trade it in such a way, in this way I'm showing you, but you need a large account because this is a very expensive instrument. So if I was trading it, I would be selling it as from as early as February 4th, 2018. I would be selling it, shorting it. I would not be investing, quote unquote, and holding it for the future. Maybe it will increase in price, etc. Right now, what I'm looking at this chart, and I'm seeing that we might get to like 93.20, but I think this would be a great opportunity to short it for a move down to like 58 or maybe even lower. Ethereum, ETH/USD. Notice there was a support break right there below this red line on the 14th of March. Notice what happened afterwards. You can saw a drop of 40% more. Same thing, we're bouncing, but I think this is a dead cat bounce for now. We'll see what it does later on. XRP USD, also known as Ripple, same thing, bearish security. You can see we're trading below this yellow line. If we get a bounce, then we could short it. This could be like a nice cheap way to short cryptos. And here's Litecoin, LTC USD. Technical picture here is bearish. The bear market in Litecoin started, in my opinion, on the 1st of February 2018, right there with a break and a close below this support at about 151. Rally, rejection. Beautiful opportunity to short right there on the 20th of February. Another great opportunity to short here on the 17th of March, and you can see that it dropped afterwards like 27%. So overall, Bitcoin, Litecoin, all of the coins that I look at are pretty much in a bear market, and if you're a trader, then short it. I would short it. My God, I shouldn't have said that, because this could be considered advice. and I'm not really advising you. So if I was trading cryptocurrencies, and the ones that I showed, Litecoin, Bitcoin, Ethereum, and Ripple, I would look for, if I held it for a long time, I would probably unload it sometime very soon, but if I was trading it, I would short it. Alright, please hit the like button below here. Again, if you have any questions, please post them below or send me a private message at MasterChartsTrading.com. Also head over to MasterChartsTrading.com, click on alerts and indicators, and you can sign up here and get the alerts and indicators on monthly, yearly, or you just can get alerts without the indicator lines that I just showed you on the chart, the red, blue, green, and yellow lines. Thanks for watching and have another great trading week. Bye-bye.